Yeah, Startup Grind. It's an organization to connect, educate, and inspire entrepreneurs. We love to interview incredible people that are doing amazing work in the entrepreneurial ecosystem. And particularly, we like to focus on founders and the journey and the story. And tonight, we have an incredible speaker, young guy doing some really interesting work. Trent Hedge, welcome.
Yeah, thanks for having me.
Trent and I actually, it's funny, we met like few years ago. Since then, he's gone on this incredible journey. Trent's co-founder and head of ops at a company called Atmos, which went through Y Combinator and is doing a bunch of really cool stuff in the home building industry. So I'm really excited to dive in with you, Trent, and talk a little bit about Atmos, the story, kind of like how you got started and all that kind of stuff. Also, before we dive in, though, I should make sure I thank our sponsors. Tonight is brought to you by Dickinson Wright, which is a law firm in town. So if anybody needs help with their startup legal stuff, hit up Dickinson Wright. Alex Young is an attorney over there. They can help you with all of your legal needs. And it's also brought to you by AWH, which is where I work in the daytime. We build custom software products for people. So if anybody has questions around software products, feel free to hit me up after the event. But yeah, Trent, super cool to talk to you, man. And you're in North Carolina, right now?
Yeah, at this moment, I am in Charlotte, which is one of our launch markets.
Yeah. So like I was saying before, we met a couple years ago. I think you were at the time you were like interning at SafeChain. And if that was the role, I actually don't remember what role it was, but and you've gone through this crazy journey. You went to San Fran, you got this new company going. How are things in your world? How are you feeling about everything?
I mean, it's a whirlwind, that's for sure, but I think that's a good thing. Things are moving fast. Again, I'm here in Charlotte, kind of physically launching the market, and we'll probably do this now for the next few markets of ours. So it's fun to be here connecting in person with customers. So many things in the past year have been online, and so being able to see people face to face and see our homes being built in person has been really cool. But
Yeah.
I know a lot's changed since we last spoke, and even Columbus has changed since we last spoke. I was there back in the summer, and I was amazed by the different people that I'd met that had moved to Columbus from places like San Francisco or New York. The company is being built. Things have changed quite a bit there.
Yeah, it's true. Like I've been in the startup community since like 2013, and it's been pretty incredible just to see the amount of new startups and unicorn activity and people moving to Columbus. It's definitely been growing like crazy. But yeah, I kind of want to ask you before we like dive too deep into like story and stuff. Maybe you can just give people an idea around like what exactly is Atmos and like what are y'all up to these days?
Yeah, sure. So we're a tech-enabled home building company. Actually, as you see here, I have my Atmos hard hat. Um, but we pretty much allow home buyers to design, buy, and build their homes completely online. So if you've ever been on Tesla's website, for example, you can go through and you can configure your car, and at the end, you'll finance it. You'll put your deposit down, and it'll show up 3 weeks later. Oftentimes, you've been compared to doing that, but for custom homes.
Yeah, that's super cool. I mean, like home building is such a like a vexing thing to me. I've never built a home. I've never kind of gone through that process. Like how on earth did you guys sort of like come up with the need and see that there was a need in that space to innovate and create new technology?
Yeah, well, maybe it'd be helpful if I talked a bit about the process as it is today.
Sure.
So when you're building a custom home, um, you start off as kind of becoming your own project manager. So if you're familiar with any of the big home builders, be it Lennar or even buying a house, you'll typically, for instance, when you walk into a Lennar community, you'll pick from one of 5 homes in a catalog. You'll point to lot B and say, I want that one. When building a custom home, it's not quite that easy. You typically will find a realtor who will then help you find a lot. as you're looking at different lots, the realtor may or may not have experience in doing lot acquisition. So then you'll find a builder who will help you determine what you can build on that lot. And you'll find that builder either through a referral or Angie's List, House, Thumbtack, etc. So go through and you'll interview these builders. And then at some point, they'll refer you to an architect, and that architect will start designing what you can build. And it becomes about a 4 to 6 month process before you ever get a price for what your home will cost. And you may or may not already own the land at this point. So it's kind of crazy. 9 out of 10 people who end up building a home say they'll never do it again in their lives. There's a strong correlation to getting a divorce after building a custom home, funny enough. So it's a really messy process.
Wow. So it's bad enough. Well, you said there's a correlation, but it seems like it's linked. It's like the home building process is so bad, people are getting divorced. But
yeah, it's somewhere between like 30 and 40% of couples who build a home together get a divorce within 3 to 4 years thereafter. Like the years thereafter are directly related to the percentage.
That's super interesting. And what an unfortunate statistic, but I guess it's good for Atmos in a sense. Not that, and we hope for people to be divorced, obviously, but yeah. So like, I guess like I want to start off by pointing out something which is probably not fairly obvious right away, but like you seem to have gotten started in entrepreneurship like at a young age, like relative to maybe most people. Like how old are you now?
Just turned 21.
And that's so wild. Like what, like were you just super entrepreneurial like when you were young? Like how did you like get into entrepreneurship originally?
Yeah, I mean, going way back, at the peril of sounding like a cliche, I was back in preschool, started selling Buckeye necklaces, funny enough. So it maybe wasn't $1 billion business, but it was a Buckeye business. So I would set up a table in front of the preschool. As kids would come in, I would sell them $80 Buckeye necklaces and ended up making like a few $1,000s. So that was probably the first thing. I was like 5 or 6, but I was really fortunate to grow up in sort of an entrepreneurial family. My parents had a small business there in the Columbus area. And so I don't know, I feel like I got to draw a lot from them. And then I ended up having a few of those small, sort of somewhat juvenile, but fun businesses as a kid.
Yeah. So like when you were a kid, what was your exit strategy? No, I'm just kidding.
Yeah.
That's super interesting. I think that there's a lot of entrepreneurs that kind of start at a young age. They have some kind of instinct or entrepreneurial like curiosity. A lot of times you'll hear about, people that started like a lemonade stand, or like they had like a paper route, or they were trading cards or doing something to kind of like develop an understanding around business. But like, I guess, did you always know that you were going to be an entrepreneur?
Yeah, I think I always wanted to be an entrepreneur. I just think the ambitions have maybe changed over time as I've gotten more and more exposure to the rest of the world, and even within Columbus. So for me, I started off thinking I'd probably be a small business owner. For context, my dad owns a payroll processing and employee benefits company. So he started off as an insurance broker. So I thought I wanted to go into the insurance space and sell insurance. I mean, being in Columbus, that's kind of what a lot of people do there. So that was the first thought. At some point, I thought maybe I wanted to go into real estate, which kind of comes full circle now. And as I started learning more and more about tech, back when I actually see my brother here in the crowd, but
No pressure.
Crowd. But yeah. So he was building a landscaping business in high school, and I was in middle school, probably 12, and I started working with him on that a little bit. And as he went to college, I started doing it more and more, and we ended up doing like 60,000 in revenue over a summer at one point. And so I built a website for it, thinking, we're doing a little bit of business here. Maybe we should have a website. This is the modern era, after all. So this is right around the emergence of like Squarespace and Weebly. So put together a Squarespace website, started editing the CSS and HTML a little bit, and then turns out I got fascinated by the idea of publishing digital products and having them available to the world
Hmm.
versus putting shovels in the ground in this little suburban town of Columbus. And so, yeah, that was really fun and exciting for me.
Dude, like having $60,000 at that age, like, what did that feel like? A lot of money? Were you like, did you catch the bug at that point, or like, how did you look at that at that age?
Well, yeah, I mean, it was fun making money at that age. A lot of my peers weren't necessarily making money, so that was fun. But it was at some point that got old because I
Yeah.
realized I wasn't really creating any change, right? Like
Mm,
money is good to a point,
yeah.
but so long as I'm just continuing, it doesn't scale, right? I'm just the amount of shovels I put in the ground is the amount of money that I take home.
Yeah. Yeah, for sure. For sure. So like at some point, you decided to take this journey to Silicon Valley and kind of go out there and experience that ecosystem for a while. Like, I guess what was that journey like for you, and how was living in Silicon Valley compared to sort of Columbus?
Yeah, I'll start with the first question, I guess. So
Yeah.
it started in Columbus.
Hmm.
I got into tech back when I was probably freshman or sophomore in high school. So there was this company called Root Insurance, which had about 7 to 10 employees at the time.
Hmm.
And I had reached out to them, pitching Alex, their CEO, on a driving gamification platform. At the time, four other students in my class had just died in a car crash, and so
Hmm.
it was something that was personal to me. And I thought, well, it's the riskiest class in terms of auto insurance, right? You have the premiums are most expensive at that point, so teen driving is both really costly and really unsafe. So we ended up doing this, like, I mean, our whole high school was late to class one day because we were like flipping pancakes for app downloads in the parking lot. It was fun. So that was where I first caught like the real startup bug.
Hmm.
And then I started working for this company called SafeChain, as you know,
Hmm.
in my senior year. Um, I remember I actually played football in high school, and
Hmm.
I was playing football, and I got introduced to their CEO and started working with them a little bit. And I remember going and telling my parents, I think I'm going to quit football and go join this startup. And they thought I was absolutely crazy. Um, and so, you know how sacred football is in Columbus.
Sure.
So,
Yeah, that's like a
um,
sin. You can't quit football, man.
well, my parents they'd probably hate me for saying this, but my parents were divorced at the time, and they somehow got into a room and hopped on a call and said, if you quit football, we'll never talk to you again.
Oh,
And
wow.
I was like, cool, well, I'll call you when it's done. Um,
Wow.
so, you know, of course they didn't disown me. That was just a figure of speech, but
Sure, sure.
um, obviously it was very important to them. So anyways, I
Mhm.
ended up going and working for this company called SafeChain, and halfway through my senior year, decided to actually leave and join them full time. And I remember getting an apartment downtown, and I was doing product management related work for them. So
Mm.
I remember getting an apartment downtown, and I had to get someone to co-sign because I wasn't 18, so I couldn't have my own apartment. It was a fun time, but I remember thinking at that time, do I want to go to school, or do I want to keep doing this? Because a lot of people who go to school want to work at a company like this afterwards, right?
Mm.
Um, and so I remember some people would give me the advice of like, you know, you're crazy to go to school, but I never said that. And other people, because they didn't want to be to blame if, you know, I ever regretted that decision. And other people, especially around my family and friends, would say, of course you have to go to school, right?
Mm.
That was kind of the normalized thing to do. So um, long story short, I ended up going to school out in San Francisco for about a semester.
Mm.
And then at that time started working for a venture fund and did kind of the same thing I did at SafeChain, ended up leaving school to go work for them, which if you want to get into, I'm happy to.
Yeah, I mean, like, so it's interesting to hear you talk about the journey with school and everything. I mean, you hear a lot of like entrepreneurs at a young age, they think, well, do I go to school? And they see like, that not everything that you do in school has a purpose, or it leads to your end goal. And so I think it has to really serve like what you want to do in your life for it to make sense for a person, right? Especially with things like debt and all that. But like, it, you know, it's interesting to me that it seems like even like while you're doing it, you're going to school, you're still thinking about, how to get involved in the entrepreneurial world, and how to really like, where at that time, were you thinking about starting a company, or were you still kind of in this phase of like work for others and kind of learn, like what was your mindset like at the time?
Um, yeah, so I remember at that time I felt like I still needed to learn a lot. And I didn't really, I think, and we can maybe cover this later on, but I think um, the idea of like forcing building a company doesn't really work.
Yeah.
So I saw a lot of people around me saying like, here's my journal with my 100 startup ideas. Which of them
Mm.
should I work on? And I didn't think that that was the right way to go about it. So I wanted to learn from people around me, and naturally, as something kind of came in front of me in terms of a real problem that I see, not a solution, I wanted to
Mm.
work on that. So I thought
Mm.
that at some point I might work on a company, just not then.
What do you think is a good reason to start a company?
I heard someone put it one time as like, you, so long as you're not waking up and going to sleep thinking about this problem, you probably shouldn't be working on it. And I think
Mm.
that's probably an extreme way to phrase it to a
Mm.
degree, but it is true. Um, I mean, I think every company, no matter how good your team is, no matter how good the market is, or rather, it all is about market in the sense that I think it's about timing, right? If
Mm.
we've seen plenty of great companies, plenty of great ideas being worked on, but if the timing isn't right, it doesn't make sense. And so, oftentimes, when you feel something that something is wrong, it typically means that other people are feeling the same way. And so,
Mm.
in my mind, it's a good indicator of timing.
Yeah. Yeah, I think there's like so much to that, where like there's this sort of romantic idea around starting a company, and people watch the Social Network and then they think, oh, I can just go start a tech company and then raise money and live some kind of interesting glamorous life. But it's, as a lot of people find out, it's a very difficult journey sometimes, and I would say actually all the time. It's like starting a company is just hard. And so like I agree like 100%. Like you really have to be thinking about the problem itself and wanting to solve that problem, especially if you want to stick with it for a really long time. You have to actually have some kind of connection to it, and some, or on some level really want to work on that problem. Because it's like super easy to just like jump in and like be like, oh, I'm just going to work on something, and then 2 weeks later you're done, because you're like, well, I hit the first roadblock and now I quit. um
Yeah.
so I don't know, that's that. Go ahead. What were you gonna say?
I mean, a lot of investors call this founder market fit.
Mm.
It's a kind of a buzzword at this point, but some would say that it's as important as reaching product market fit. And there are edge cases to this, right? There are people who have no business starting the company that they start, and somehow it works. But that's a very small percentage of the population. And so most founders, again, aren't these founders sitting there looking at a book of ideas. They're founders who are actually doing something in a very specific field and think there's probably a better way to be doing this, at least
Yeah.
from my experience. I could be wrong.
Yeah. Yeah. So like how did you sort of get connected with like your co-founders? Like how, like at what point did Atmos start to come around?
When I was working at that fund, so I had pretty much left school and started working for this fund, and I was expecting. I thought moving to San Francisco would be this really glamorous life, right? People talk
Mm.
about, you see it in shows and movies, and people talk about meeting all sorts of other ambitious people. Turns out it's not that sexy of an experience. It's like humans defecating on the street and people living in bunk beds because a one bedroom is $4,000 a month. With the
Yeah.
pandemic, things are changing a little bit. I ended up finding that in Columbus, I tried to start this community of other high schoolers in tech or building interesting companies, and turns out that was a very niche thing. Um, And I kind of tried to do the same thing when I was out in San Francisco. So I found that it was pretty difficult to meet other sort of 16 to 22-year-old founders, or even not, maybe not even founders, but like tinkerers. And
Mm.
ended up finding that a lot of them weren't really in San Francisco. They were still like in their parents' bedrooms hacking away on something, or in their
Mm.
college dorm room, whatever. And so 10 of us ended up moving kind of from all over the place into this house in SF. And two of those people are now my co-founders. So I didn't really set out on the thought of I want to go build a company, but
Mm.
more so build a community and happen to find my tribe per se.
Yeah, I think that's a thing that a lot of I hear from a lot of founders is that it's hard to find people like you on your journey, and it's easy to feel like, you're the only one in it, especially if you're if you're a solo founder, it can be incredibly hard. But it's interesting that you point out this, like, building a community, and I guess, like, how, for people that are trying to think about like starting something, maybe they don't know how to find co-founders. Do you have any thoughts on that?
Be it having co-founders or not, I think it's like oftentimes, again, people are starting from like, how do I build $1 billion business versus
Mm.
how do I drive value to a small subset of people?
Mm.
Or even how do I start something that might look like a toy today, but could be a massive company tomorrow?
Mm.
So an example of that would be, there's this company called On Deck, which people would say might be like the next YC,
Mm.
Y Combinator. They started off as a weekly newsletter, right? Um, Angel List, they started off as a blog.
Mm.
There are a lot of examples of these companies, and there's a fund, actually, if anyone wants to check it out, called Shrug Capital, and their whole thesis is investing in companies that initially look like toys.
Mm.
And so I think I think regardless if you have a co-founder or not, if you're working on something really interesting, especially if you're building it for a community of people want to be a part of what you're doing, but just get started on something, right?
Mm.
And something that you feel very passionate about.
Mm.
So, and this is kind of unrelated, but even for us, we're building homes now, and we
Mm.
have home buyers who just love what we're doing, even though it's still operating at such a local level, and they're saying, hey, I want to come join the team, right? And so once you build something that people really love, everyone will want to start being part of it, I think.
Yeah. So just kind of on the topic of starting, and like, what was sort of like the first like MVP kind of approach? Are you still kind of at MVP, or what was the first MVP like of the company?
When people say like you have a duct tape product, ours was maybe a scotch tape product. Um, it was pretty rough. So we're still kind of transitioning out from it now. Even
Mm.
we're going to launch something here in the next few months. But
Mm.
um, what it looked like was we were pretty much pooling available lots from a public API, pulling floor plans that we found from across the internet, 10,000 different floor plans, and then on the back end, just stitching this together. So it was very manual. It kind of started off as a services business.
Mm.
Now we're transitioning to a place in which we can identify lots and then automate the process of determining what can be built on those lots, and allowing people to go through and actually make the customizations online versus, again, us kind of doing it on the back
Mm.
end.
Mm. So would you say you launched before you felt ready to?
Oh, 100%. The day we launched, I was actually very nervous. I mean, the site was going down every hour. The whole thing worked, half the time. But in hindsight, that was definitely right. There are a lot of, so you mentioned like we participated in YC, and there are a lot
Yeah.
of like startup cliches that come out of YC. But the one that Paul Graham says all the time is like, if you feel confident when you launch, you've launched too late.
Mm.
And that's something that was really hard for me to buy into in the moment. I'm a bit of a perfectionist and sometimes a control
Mm.
freak, but
Mm.
now we've launched probably 3 times since. I think Airbnb launched like 8 times in the early genesis of the company.
Okay, that's an interesting concept. So you launch multiple times, essentially, like you launch a next iteration. Is that kind of what you mean by like launching multiple times?
Yeah, and it doesn't always come in the same form, right? Like we
Mm.
launched on Product Hunt, which is a website for early products. We then have done multiple press releases in which the company looks completely different. Um,
Mm.
so the ways in which we've launched have been different each time, but the company has always looked very different.
Yeah. Just to ask a kind of a follow up on the YC experience, I guess like how did you get into YC? Was it like a traditional, like I know they have the startup school now, or is it just like an online application, or how did you get into the accelerator, if you don't mind me asking?
Yeah, yeah. Well, and they do a great job at producing all this content and now having startup school and all that. So if anyone
Yeah.
hasn't checked that out, I'd recommend it. But we ended up getting rejected probably three times, and got in on the fourth. Before we were a home building company, my co-founders were actually working on a VR company,
Hmm.
as a lot of young founders end up doing at some point. I can talk about how the two ended up converging, but they had applied with that probably two times, a third time right when I joined. And then we were actually raising our seed round. So we had our initial seed round was about $2 million. We had 1 million of that committed. And that was when we got into YC.
Hmm.
Moral of the story there was like YC needed to feel like the train was leaving the station. And if they wanted to be on it, they could be on it. But that was it, right? When
Hmm.
we were like the early stage pre-seed angel led company, just like scratching at wanting to be in YC, it didn't work.
Because I think a lot of people that are considering going into an accelerator, like I've had conversations with founders where they're like, "Hey, I've already raised $1 million. My valuation is, a certain amount, and I feel like taking a chunk of my equity or whatever and going to an accelerator is somewhat moving backwards." I mean, did that ever like go through your head, or were you just like, it's YC, we may as well like you don't get better than that?
No, I think this idea of like it's YC or it's whoever investor or whatever like credential
Hmm.
is oftentimes way overvalued.
Hmm.
So like I think it's important to be clear-eyed, right?
Hmm.
Ultimately, they're taking 7% of your company, so you should
Yeah.
probably think about if that's something that really adds value.
Hmm.
Um, for us, we were actually raising at I think a $10 million post money valuation, meaning we were
Hmm.
raising $2 million. After we raised the $2 million, the company would be valued at 10 million.
Hmm.
When you take YC's money, they value the company at 2 million. So
Hmm.
we were sitting here saying we're like we can either continue raising to the 2 million at a $10 million valuation, or we can take $150,000 at a $2 million valuation and sell off 7% of the company.
Hmm.
So that was a really hard question for us.
Yeah.
Ultimately, we decided that we would do it. Um, and I'm happy to go into why, but that's not a decision we regret at this point.
Gotcha. Yeah, that was actually my follow-up question, was like, is it well worth going through, and like how do you think going through like an accelerator like that helped the company?
Yeah. I think they're like it's very company and founder specific, right?
Hmm.
So if you have built two venture-backed companies and exited, and you're building, let's say, like a consumer business, that's a
Hmm.
good example of someone that probably doesn't need to go through YC. Um, Someone that does maybe or should is maybe like a SaaS company where they're selling to other businesses, because there's this like YC network effect that is crazy, right? Um, you can pretty much get you can pretty much get to a series A, if not series B, off of YC companies alone. um, so that's one aspect, and then the other aspect is more so with us, where we were younger founders, hadn't really built a great business before, and YC was helping us to look around those corners.
Hmm.
So there were many instances in which they would tell us things and we'd be like, oh yeah, like that sounds ridiculous, or it just sounds like bare bones advice, and then fast forward 3 months and the advice we ignored would be true.
Hmm.
um, so eventually we caught on and started learning from that. um, but yeah, they were super helpful to us. And again, I think it's just very case specific. But if
Gotcha.
anyone's thinking about applying to YC, I'm also happy to talk about it offline.
Yeah, yeah, yeah. Can you get us into YC? No, I'm just kidding. uh, yeah, no, that's cool. Well, yeah, appreciate you sharing that. So, as far as the like your experience with the product goes, like you mentioned like consumer companies, SaaS companies, and these sort of things that we were talking about YC. Like, to what extent is the play? Is it direct to consumer versus like, I mean, it's a marketplace, right? So there's two sides, I assume. But like how, I guess like how does the supplier part work? Is it like a B2B kind of relationship, or are you just like aggregating data?
Yeah, yeah. So there's what's called there's a marketplace and a managed marketplace.
Hmm.
Andreessen Horowitz, the venture firm, has a few blog posts on this, talks about this a lot. But a managed marketplace functions a bit differently in the sense that we're still involved throughout every step of the process, right? We're
Interesting.
not saying, hey, home buyer, we have a builder, go talk to each other, and we're just going to recuse ourselves.
Hmm.
That an example of that would be like House or Thumbtack, Angie's List, etc.
Hmm.
Instead, what we're saying is there are a lot of different steps. Again, starting with the lot, then the home design, um, and then financing it, closing it, etc. So we've pretty much built out a process in which we have folks internally who are responsible for every step of that. And then on the back end, for anything that we don't have internally, we will then fulfill through this managed marketplace, right? So we have, and over time, we'll continue to sort of eat more of the stack, quote unquote. But
Hmm.
our building partners are the best example of this. So in every market, we have 1 to 3 strategic building partners that then will build all of our homes. So we kind of take on that general contractor role, interfacing with the home buyer. And for
Hmm.
them, they can focus on what they're great at, which is laying sticks and bricks, coordinating subcontractors, et cetera.
Hmm. Is there a reason you chose to go the managed marketplace route? Like, or I'm assuming there is, but like, is it like a quality thing, or like what was the, because I imagine that's on some level a lot more work potentially. Um,
Yeah. I mean, so there's the biggest thing is you see a lot of capital intensive businesses, right?
hmm.
So look at Open Door, for example, who
Hmm.
IPO'd via their SPAC a few months ago. So they're a great example of a very capital intensive business.
Yeah.
Um, what we found was like we don't want to go and rate like one first off, we're pre at this point where we've raised $200,000 as a pre-seed company. We
Hmm.
can't go and pretty much build out an entire building arm of the company,
Hmm.
go and raise debt capital to then buy land. And so we were trying to do it kind of as lightweight as possible.
Hmm.
So that's part of it. And then the other part is like there are people who are really good at what they do in these local markets.
Hmm.
They're just not sort of abstracting out and thinking about it from the consumer perspective. And
Hmm.
so, can we launch into these markets, partner with who we think are the best folks at what they're doing, and then use that flywheel effect to then spin up in those markets much faster than we would if we were just launching into it ourselves?
Hmm. Gotcha. Yeah, that's super fascinating. So I want to ask you a little bit about some stuff not necessarily related to Atmos, but you've since going the entrepreneur journey and everything, you've also started doing some like angel investing yourself, and I'm curious, like how do you approach angel investing?
Yeah. For the record, I would definitely call this a side hustle if any of our investors are listening to this. But
Sure. Yeah.
um,
No, it's not full time. It's just like you've done some, right?
yeah,
Like,
yeah,
yeah.
yeah, yeah, yeah. So I what I find cool about angel investing is that I get to work and back with more than just my words, other founders who are at a similar stage as us, right? So we're a later stage seed company, but point is we're still a seed company. And so
Hmm.
what I love the most is finding other founders who I really align with and being able to write a smaller check and ultimately learn from each other. So that's
Hmm.
kind of my approach as it stands today.
Hmm.
If I were a gray-haired man and had 50 million in assets under management just for venture, I would probably have a different approach to that. But
Hmm.
um, the way that I think about it is again from a team perspective first. So
Hmm.
um, finding people that I find really interesting. What I learned the most from building this company is that again, it first started off as a VR company. And we had people really early on who just believed in us as people and were willing to write a check. And even when we said, hey, we're completely pivoting the business, they were really willing to write a larger check, right? And so what I want to be for people around me and for other founders is that person who believes in them as people first, um, market second, and the product third. So
Interesting.
I think oftentimes people will look at investments as product first, then maybe market, then maybe people.
Hmm. That's super fascinating to have that as an approach. How do you like think about like what makes a like a good team or like a person that you would like believe in? I mean, it's super hard to get to know people. I feel like, but I mean, I imagine you have some way of like getting a sense of like what a person's like. Are there any things that you kind of look for?
I think the biggest thing is you can go back and look at some like blog posts of how people described Airbnb founders really early on, and they described
Hmm.
them as cockroaches. Like you could try to kill them, but no matter how much you tried to kill them, they would never die. um, that's those are the types of people that I want to write a check into and support, right? The people who, again, like we changed the company multiple times, yet we never died. And so I want them to be of a similar mentality. I often will tell people like, hey, truthfully, like I think the company might change a little bit from where you guys are at now, but no matter what, like I'm here to talk through it. And
Hmm.
so that's the biggest thing. It's just people who will never die and are not married to one version of the company, but rather are willing to take in a bunch of different inputs and actually react to it, right? Like talking to customers and saying, maybe the way we're thinking about it isn't the right way. You
Hmm.
oftentimes will find people who, especially if they have had personal interactions with the problem in the past, which is why it's important to take your own experience with kind of a grain of salt, which I know is a little counterintuitive to what I said before. They'll say, this is the solution and I know it for a fact. And so I'm going to go and build that thing. And oftentimes they'll ignore the advice they get along the way.
Hmm. Yeah. Do you, I mean, like as an angel investor, is your experience that you have to go out and like really like find people like this, or are people coming to you at this point? Like how do you kind of find deals and that stuff?
Yeah, good question. I try not to put a whole lot of time into going and sourcing deals just because I
Hmm.
have a company of my own to build right now.
Sure.
Um, Fortunately, having gone through YC, like you said before, and building a community of other young founders, things like that, I've been able to see some interesting companies.
Hmm.
And so I'm also trying to passively invest
Hmm.
right now.
Gotcha. Gotcha. So one thing I realized I forgot to ask you that I kind of want to ask about is, as a team, are you a distributed team? Like where's the everybody located? And you've got like these different markets you're in. How does that all look?
Yeah. Well, first off, like the way that companies are functioning is obviously very different from during COVID. I assume everyone on this call right now is working remotely, if not most of you.
Hmm.
And so for us, we're taking long-term what we call the hub and spoke approach, meaning we'll likely have our office or our headquarters still in San Francisco,
Hmm.
um, and then have kind of our spokes, which would be our remote offices. So typically these are going to be in markets that we're live in. So Raleigh, Charlotte, and future markets like Phoenix or Portland, et cetera.
Hmm.
Um, and right now the team is all over the place. So they don't even have to be able to go to one of those offices. So we have
Hmm.
folks in Canada, Brazil, LA, Columbus, here in North Carolina, et cetera.
Uh, One of the things that's kind of interesting is like, how do you, because is the point, like originally when my first perception of it was that you might be targeting people that wanted to like move away from Silicon Valley or like some of these coastal cities. Is that part of it?
In terms of our sort of go-to-market strategy per se,
Hmm.
I mean, it was a really interesting time for us to launch, right? We launched officially late spring, early summer of last year.
Hmm.
And at that time, this was, still early days in the pandemic. And a lot of people were looking to get out of major cities, still are. So our general belief is that major cities will always be major cities. If you look, a lot of people move into major cities between 22 and 28 at the start of their career. And I think that will be true for a while, right? New York will always be New York. San Francisco will still have the technical and hard tech advantage that it has today. But people, as they get into their late 20s and then 30s and especially 40s, want ownership. They want home ownership and they want space. And so they end up looking at secondary markets or emerging markets like, Charlotte, for example, Austin, again, Portland, et cetera. And so what we want to do for them is be able to build the exact home that they want and make it as easy as possible.
I don't know if you have any plans to, or you don't have to tell us if you don't want, but like, are you thinking of Columbus at all as a market potentially?
Oh man, I'm so excited to launch in Columbus.
Oh yeah. Nice.
Yeah. We actually get a lot of requests. So if you go on our website and you type in a city that we're not yet live in, it'll say like put in your email to get notified. We get a ton of requests for Columbus. And so obviously I'm biased and my whole team sometimes makes fun of me for how much I bring up Columbus, as has every team that I've ever worked with. But yeah, it's probably somewhere in the next 3 to 10 cities.
Okay, that's good to know. Good to know. So we will get Atmos at some point, because for those of us listening that might want to build a home in Columbus, just throwing it out there. One question I have though is like, and you kind of alluded to this a little bit in your last answer, but like, do you have a sort of like a way of like picking cities or like geographies? Because I feel like maybe on some level it's low risk, or how do you think about picking a city?
There are two answers to this. One is a very like technological answer, which is the way we picked the triangle, meaning Raleigh, Durham, and Chapel Hill, and then Charlotte, were two things. One, we had built this massive launch market calculator that pretty much took factors ranging from its exodus score. So before the pandemic even happened, we were kind of measuring, are people leaving cities like New York and San Francisco to go there? What's the average price per square foot? How much new construction is happening there year over year? So for example, the South is one of the most active building regions. Well, it is the most active building region in the country. So that's kind of the technical answer. And the non-technical answer is for North Carolina, two of my co-founders actually went to school here. One of them grew up here in a home building family. So it just made sense. In the future, we'll still take that very data-driven approach. Now we have customers actually telling us where they want us to go, which is kind of nice. And then we'll go and set up market. So there's about a 3-month pre-launch market process. And if we're not seeing the numbers we like, then we'll probably just pull the plug and probably circle back to that later on.
Gotcha.
So it's kind of a multi-tiered approach.
Gotcha. Well, so I actually want to turn and give the group, if they have questions, a chance to ask some questions. I know I didn't warn anyone ahead of time that we're going to do a little bit of Q&A. While people are thinking about it, I want to ask this as a random question. So like when I first met you and you were working at SafeChain, it seemed like you were doing like a bunch of research on blockchain. And like, I'm curious, are you still involved in that at all?
I try to keep a pulse on crypto. It's hard not to these days. It's kind of re-emerging with NFTs and all sorts of fun stuff. Back in 2017, when I met you, that was like the crypto peak, right?
Yeah.
Until now, at least. And so I've been less involved, but this is probably a topic for another time. I think at some point, real estate and crypto likely merge. There's a cool company in Columbus called Rove. I don't know if you guys have heard of them, but they're doing, so they're doing like pretty much giving you ownership in an apartment that you're renting, right? And I think that's like an early iteration of where the general space is going. But I probably framed it to you as like some super sexy research project I was working on at the time, Lucas. The real answer is people at SafeChain thought it was like, you got to put in your hours, and I was doing my grunt work of really getting to know the space. So I was researching I was personally combing through 250 white papers at the time.
I remember that. And I remember asking you and being like, what's a white paper? Because I wasn't super into it yet. It was very shortly after that, but But I remember thinking like, oh, this kid's like a genius. He's like studying all this crypto stuff. I wish I was doing that at that age. That's the only point I had. But we do have a question that came into the chat from Richard Kubina, which is, by the way, hi Richard. What are your favorite productivity tools for your team, and what apps, what are other apps your company can't live without?
Hmm. Interesting. So we started recently using this company called Linear. So you go to the website, linear.app. Think of it as like Asana, if you've ever seen that, or Trello, but it actually integrates with our dev team. So it integrates with GitHub, and we'll pretty much link the work that's actually getting done to the work that we said would get done, which is a really cool concept. So that's been cool. And we're now leaning more and more into that. We started off, I think on the sales side, people oftentimes will like either not invest enough or make too much investment into their tech stack. So we started off with a company called HubSpot, which with HubSpot, you can get like 90% off if you finagle it the right way with their different like referral partners, typically being a pretty costly software. Now we use HubSpot for marketing automation, Salesforce for CRM, and then a suite of other tools kind of integrated within. The other one that we use for kind of our company wiki is Notion. I don't know if anyone has seen what Notion is. It's a pretty wide product, meaning like they've gone very wide. They've built a lot of features. I'm not sure it'll always stay with us. At some point, way in the future, we'll likely build our own. Stripe is a good example of this. They've built a product called Stripe Home, which is super impressive, and something that one day I'd like to emulate when we have the time and resources.
Just out of curiosity, Trent, like as far as like recruiting goes, how are you finding talent, and like especially like being a distributed company, and like how are you thinking about sourcing talent for the company at this stage?
Yeah, we're luckily still at the point, we're not a massive company. Again, we're a seed company, so we're about 12 full-timers and a few contractors, but we're ramping up hiring now. Early on, we got into the bad habit of hiring friends and people around and not actually going and finding what we thought were the best candidates. Now it's kind of a mix. We've realized that like we don't really need to tap into these like second degree networks. We can get intro to people that we know quite closely, and those are typically well vetted referred candidates. So it's I guess it's kind of a balance as a short answer. Once you hit the point of like 30 to 40 plus, we'll probably have to start actually working with like recruiters and those sorts of things.
Gotcha.
Speaking of that though, later this week we'll be releasing a few open roles. So sales, project management, which is on the home building side. It's actually working with customers who are building homes, and potentially a couple engineering roles here soon. So if anyone wants to check them out.
How are you thinking about like sales as like integrate like with the whole business model? Like how do you think about sales? Is it like a realtor or something?
Yeah, sometimes when I'm in these markets, I feel like a glorified realtor or just a realtor. So there are a few different types of salespeople, right? There's field sales, there's inside sales, and the list kind of goes on and on. At some point, our model will eventually become partially inside sales, meaning we'll have SDRs or BDRs who are qualifying home buyers, and that can be done from anywhere. And then we'll have people in person. We find that this is such a close to home, literally home process where people need to trust us a lot. People also want to tour our homes in person before they decide to build. So we'll always have an in-person component, but likely over time, a more centralized remote one as well.
So some boots on the ground, but also having the ability to do remote. That's super interesting.
If you look at, I hate to make another Tesla reference, but if you look at what they did, their first 100 cars were sold completely online. And then at some point they realized this doesn't scale. People need to buy into what we're doing and kind of touch and feel the car. So then they started opening up these showrooms, right? And now that's where the majority of their cars are sold. And so for us, it's somewhat similar. In fact, our purchase is actually higher dollar value, so it might even matter a bit more.
Yeah. Like, well, because I mean, Tesla has a showroom. I mean, tours are almost somewhat challenging unless you have models built, or if you have like the model based off of like an existing structure that people will welcome you to. So, like, is there what are your thoughts around that side of it?
Yeah, so we like again being able to kind of leverage what already exists. We've been working with our builders homes, but as of
Oh,
this
gotcha.
past week, we're getting started on building our own model home. That'll be part of our launch process
Hmm.
in new markets as well as building a model home.
Will employees get to live in the model homes?
Um,
Not to
I
put
mean,
you on
I'm
the
kind
spot.
I know. Well, considering right now I'm going market to market, I've been asking the same question.
Hmm.
Um, but I don't know, maybe.
Who knows?
I
Yeah.
mean, the thing is, like, people come, like, walk in and out of model homes all day. One of a local home builder here who's now regional and is probably a $500 million business. 80% of their customers come through people just walking into the model home.
Hmm.
So I don't, you know, we pretty much need to have like operational hours at all time for people just to walk in and out. It's crazy. I never would have expected that.
Hmm. Anybody want to unmute and ask a question to Trent?
Also, as a side note, in terms of you asked about investing earlier on,
Yeah.
recently I've invested in a couple Columbus-based companies. So if anyone's ever working on anything and they want to chat or whatever, feel free to reach out. I'm happy to. This isn't me shilling. This is just me offering myself as a resource.
Yeah. Yeah. And now the people that didn't speak up are going to be like, oh, I should have pitched my business. No. The one question I have for you is like, at this stage, what do you think are like the biggest, like challenges or like things that people can help with, or what are you seeing are some of the big challenges right now in the business?
Yeah, so I mean it's still a challenge, but up until this point, I would have said like really figuring out go to market. Right now, we're beginning to kind of consistently figure out what our sales engine looks like. I find that at the pre-seed and seed levels, companies drastically underestimate go to market and drastically overestimate product. I think early on, we've sometimes fallen into that same trap. So that's what I would have said previously. Now I think it's really figuring out how it all comes together, right? So how do product and sales and BD and marketing really work in like a step sync to be able to now hit the numbers that we want to hit and build the amount of homes that we want to build. I think the biggest thing for us as well is again, like we're built on the premise of delivering a better home building experience, and that's not an easy feat. So ensuring that every person who builds every home buyer who builds a home with Atmos has a fantastic experience is at the top of our priorities.
I'm going to go ahead and close it up then. But Trent, thanks so much for coming and sharing your story. This was super fascinating. I think like everybody listening in, we're like super excited for what you're doing and, seeing where Atmos goes and the things that you do. I'm assuming that, we'll have another thing come up in the future. Maybe we'll do another startup grind or something when there's like a big update. But yeah, we really appreciate you coming and like, taking the time for the community and being willing to answer questions, because that is part of the community and part of what people need when they're thinking about starting a company is they need to hear from other founders who are doing it. So thank you so much, man.
Yeah, of course. Thanks everyone. Have a good one.